Bismillahirrahmanirrahim.
Assalamualaikum
Assalamualaikum warahmatullahi wabarakatuh. We'd like to introduce ourselves first. My name is Viladini Nafianti, and
and my name is Rifki Kaisario Kurniawan.
today we'd like to present a review of a book by Umar Chapra that's called Toward a Just Monetary System.
In this book, there are include 9 chapters, exclude introduction, and we will talk about the scope of the book, and then the identity of book. The title of this book is Toward a Just Monetary System. The author is Muhammad Umar Chapra, publisher the Islamic Foundation, publication year 1986, number of pages 300. The scope of the book. The scope of this book is limited. It doesn't and cannot go into all aspects of Islam or of the Islamic economic system. It tries to answer only those questions and to analyze only those issues which are related to the Islamic money and banking system. In chapter 1 shows some of the important goals of Islam that need to be realized in the money and the banking system. Chapter 2 discuss of the nature of riba. Chapter 3 and 4 show the alternative to riba and the reform that must be instituted in Muslim country. The chapter 5 evaluates the major objection raised against the abolition of riba. Chapter 6 provides the institutional setting, which it may superficially appear to be similar to the conventional framework. Chapter 7 discusses the management of monetary policy in the new setting. Chapter 8 evaluates the proposed program. Chapter 9, the concluding chapter, gives some tentative suggestions for the gradual transition of the money and banking framework.
Okay, in the first chapter, it's discussed the goals and strategy. First, the goals. The money and banking system should, like all other aspects of the Islamic way of life, be made to contribute richly to the achievement of the major socio-economic goals of Islam. The most important goals and functions necessary for the discussion of the fundamental characteristics of the Islamic money and banking system are: first, broad-based economic well-being with full employment and optimum rate of economic growth. Second, socio-economic justice and equitable distribution of income and wealth. Third, stability in the value of money to enable the medium of exchange to be a reliable unit of account, a just standard of deferred payments, and a stable store of value. And the fourth, mobilization and investment of savings for economic development in equitable manner such that a just return is ensured to all parties concerned. And the fifth, effective rendering of all services normally expected from the banking system. And then the strategy, the targets will be achieved with the right strategy. Islam has the advantage of a strategy where part of the content of the strategy is part of Sharia and cannot be separated. The most important element of the Islamic strategy for realizing the Islamic goal is the integration of all supposedly mundane aspects of life with the spiritual to bring about a moral uplift of the human being and the society in which he lives. Without such a spiritual uplift, none of the goals can be realized, and true human welfare would be difficult to attain. Human welfare can be realized only through the satisfaction of both the material and the spiritual needs.
In chapter 2, we talk about the nature of riba. Justice in the social economy is one of the ideal characteristics that are indispensable for Muslim societies. In this chapter, we talk about two things. First, the prohibition of riba. It's already mentioned in Quran 4 times. The first of this is in Surah number 30, verse 39. The second, Surah number 4, verse 161. The third is Surah number 3, verse 130. The fourth is Surah number 2, verse 275. Second, the meaning of riba. Riba literally means increase, addition, expansion, or growth. It is, however, not every increase or growth which has been prohibited by Islam. In the Sharia, riba technically refers to the premium that must be paid by the borrower to the lender along with the principal amount as a condition for the loan or for an extension in its maturity. The term riba is used in the Sharia in two senses. First, riba nasi'ah. The term nasi'ah comes from the nasa, which means to postpone, defer, or wait, and refer to the time that is allowed for the borrower to repay the loan in return for the addition or the premium. Second, riba al-fadl. While riba al-nasi'ah relates to borrowing and is prohibited, riba al-fadl deals with commerce. Since trade is permissible in principle, it does not mean that everything is permissible in trade because the injustice generated through riba can also sustain through business transaction. Riba al-fadl refers to all such injustice exploitation.
Okay, next is chapter 3, the alternative. In this chapter, there are subbab. The first is equity financing. Within this framework, there are only two alternatives to interest-based lending. One is Qard Hasan and the other is equity financing. Qard Hasan is a loan which is returned at the end of the agreed period without any interest or share in the profit or loss of the business. And then channels of equity. The channels that equity investment may take in an Islamic society are the same as elsewhere, namely sole proprietorship, partnership, including both mudarabah and sitkah, and joint stock company. Cooperation can also play an important role in an Islamic economy because of its harmony with the value system of Islam and the valuable contribution it can make to the realization of its goals. Some rudiments of all these forms of organization are indicated below to the extent necessary for the discussion of the Islamic banking system. For somewhat detailed detail about mudarabah and shirkah, and the role of the corporation in an Islamic economy. And then cooperation. With the emphasis of Islam on brotherhood, cooperation in its various forms to solve the mutual problems of producers, businesses, consumers, savers, and investors should receive considerable emphasis in an Islamic society. Moreover, since the general tone of business in an Islamic economy would be small and medium scale, cooperation could help attain some of the economies of large-scale business without the evil associated with it.
Next, chapter 4 talk about some fundamental reforms. The elimination of riba is only of several important values and institutions that together constitute the Islamic way of life. The three most important characteristics of an ideal Islamic environment are character, brotherhood, and justice. Some of the other reforms indispensable for supporting a riba-free economy and banking system and realizing the socioeconomic objectives of Islam are briefly discussed below. There are four things. First, saving and investing include moderation in spending, elimination of hoarding, efficient use of saving, and government spending. Second, increased equity financing. Third, reducing the power of banks. And the last, ascent stock market.
And then chapter 5, objection and rationale. The first is allocation of resources. One of the objections raised against an interest-free economy is that it will not be able to bring about an optimum allocation of resources. The reason given for this is that interest is a price, and like all prices, it performs the function of allocating scarce, loanable funds among the infinite user of such funds in an objective manner on the basis of ability to pay the price. And second, savings and capital formation. The creation of a positive and invigorating investment climate requires the perennial maintenance of justice and balance between the savers and the entrepreneurs. It would be fatalistic to assume that the abolition of riba, reliance on equity financing, and ensuring an equitable distribution of profit plus interest among financiers and entrepreneurs can provide such a climate and lead to a substantial and steady rise in the demand for and supply of risk capital.
Then chapter 6 talk about the institutional setting. Uh, the above discussion has provided the gift of the objectives, rationale, and mechanics of the Islamic banking. Although the proposed framework may outwardly appear to be the same as that in the capitalist system, in essence it is different because the objective mechanics, powers, and the scope and the responsibilities of the institution would be entirely different. There are four things. First, the central bank. The central bank. It should be an autonomous government institution responsible for the realization of the socio-economic goals of the Islamic economy in and through the money and banking field. Second, the commercial banks. Since the activity of the commercial banks is based primarily on the use of public funds, it is essential that public interests rather than individual or group interests be served by Islamic commercial. Third, non-bank financial institution. The term NBFIS is being used here to denote investment trusts or banks, credit unions, cooperative societies, venture capitalists, and a range of other investment management institutions. Fourth, specialized credit institution. Specialized credit institutions should be established the government to extend either moderate advances or current hasanah. Research may be provided such as institution by the central bank out of the newly created high power money as indicated MB or by the government out of its research.
Okay, next, chapter 7, it discusses monetary policy. The first, the strategy. An Islamic central bank must direct its monetary policy to produce sufficient growth in the money supply to finance potential output growth in the medium and long term within the framework or stable prices and other Islamic socio-economic objectives. And then sources of monetary expansion. There are three sources of monetary expansion. There are fiscal deficits, commercial bank credit creation, and balance of payments surplus. And next is instruments of monetary policy. The established monetary policy mechanisms will help not only to regulate the amount of money supply with the real demand value for money, but will also help finance the government deficit and achieve the goals of societal socio-economic justice. There consist of six mechanisms. First, target growth in M and MO, and then public share of demand deposits, and then statutory reserve requirement, and credit ceilings, and then value-oriented allocation of credit, and the last other technique.
And then chapter 8, the evaluation. In this chapter, there are consist three things. First, the Islamic approach. Islam, Islam reinforces its teaching of brotherhood and the social equality of all by socio-economic system that satisfies the needs of all in keeping with their status as grains of God in earth. It requires an equitable distribution of income and wealth and stipulates values of living that are in harmony with its goals. Second, capital formation, growth, and stability. The abolition of interest would remove the canker of injustice between the financier and the entrepreneur. The total return on capital, interest and profit in the capitalist framework would be divided among the two in accordance with justice. The financier would not be assured of a predetermined rate of return even when the business has yielded a loss. Third, monetary health. The money supply would not be influenced by the erratic and unpredictable interest rate or nor by the need to stabilize them. The intractable problem of either stabilizing interest rates with no control on money supply or regulating money supply with no control on interest rates will have been overcome. With no interest rates, the matter about money supply could be regulated by the central bank in accordance with the needs of the real sector of the economy and the goals of the Muslim society.
Okay, next in chapter 9, the transition. Okay, first, the three characteristics. Due to the centuries of degeneration, the present-day Muslim society does not reflect the spiritual luster of Islam. Judged on the criteria of the three previously indicated most important characteristics of an ideal Muslim society, namely strength of character, strong bonds of brotherhood, and incorruptible justice. The Muslim countries present an unsatisfactory picture, no less distressing than that in the rest of the world. And then the revival of values. Such a transformation cannot be achieved merely by making some cosmetic changes in a few sectors of the society or the economy. It requires an improvement in the quality of the Muslim as a person and a reform of all aspects of the Muslim society, economy, and policy. Such an overall transformation is difficult but indispensable. It cannot, however, be achieved in a short period through the use of either force and violence or regimentation. And then reforms relate to the banking system. It would nevertheless be a mistake to try to achieve the transition from the conventional capitalist money and banking system now prevalent in the Muslim world to the Islamic model in one stroke or over a very short period of time. Such an attempt could suffocate the whole system and do great damage to the economy and ultimately to Islam. The transition should be gradual and by stages running over an adequate but not unduly long period of time and must be accompanied by other reforms in the society. Okay, that's all from us. Sorry for our mistakes. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh.